The first step to get into real estate is make a move. And if you are gonna buy property that cash flows, you cannot get hurt. The majority of people that make their wealth, they make it from real estate. And they don't make it because they wait for the perfect time to buy interest rates, or they're trying to time the market. When's the best time to buy? Do not think that you are going to time the market perfectly. You can't do it in the stock market, you can't do it in the real estate market. So we buy on payments. We don't buy on the cost of the house. Why should you be buying now, even if you don't like the interest rates? There's the houses that you're gonna live in, and there's the houses that you're gonna rent out. When should I buy a house? And should I buy a house now? Hey guys, welcome to the Real Estate Doctor podcast, where I'm here to educate, inspire, and entertain you. Today, I want to talk about a subject, most people are always talking about almost daily, which is, when should I buy a house? And should I buy a house now? Well, actually, that's what I'm going to start with. Yes, you should buy a house now. Everybody, while I'm recording this, for now 2 years have been waiting for interest rates to go down in order to buy a house. Now, there's two types of, there's the houses that you're going to live in, and there's the houses that you're going to rent out, right? So a house that you're going to rent out, if you can rent it out and interest rates are 16% and you can still cash flow, you should still buy that property. If you can buy a property that cash flows with any rate, you should do so. Now, obviously, if you can buy one that cash flows more, you should buy that one, or one that has a better interest rate, especially if it's a 30-year mortgage, then you should use that one. Let's eliminate a couple things I'm going to talk about. One is, a property that I want to cash flow is, any property can cash flow. I mean, if you buy a property, for $200,000, you pay cash, it'll cash flow. I'm talking about property you're going to put debt on. So, and significant debt, 80% of the purchase price, 100% of the purchase price. So if you're going to leverage them, you want to make sure that whatever you're borrowing is covered by the rent. Now, when I say covered by the rent, you got to make sure you use all the expenses. This is not like, hey, the rent is $2,000, my mortgage is $1,400, and I make $600 a month. This is crazy. Like, you have property management expense, you have property management expense, you have property taxes, you have insurance, you have maintenance, you have vacancy, you might have condo dues, which if you haven't watched any of my other stuff, don't buy a house for a rental that has HOA or condo dues. Matter of fact, I don't even know if I like them to live in. But that being said, you should be buying now. So why should you be buying now, even if you don't like the interest rates, right? Well, one of the things that I did a poll on my Instagram, and if you're not subscribing, please subscribe and follow me on Instagram. I did a poll, and I was like, are you waiting to buy for interest rates to go between 5 and 6% or 4 and 5%? And then I gave, or you're just buying. 67% of the people said they were going to wait until interest rates got between 4 and 5%, which blew me away, right? Because they're not going back to 4 or 5%. Like, I can tell you that. I mean, if you look at the history of interest rates over time, matter of fact, I posted something today that interest rates in 1971 were 7.33%. And if you wanted to wait for those interest rates to go down, you would wait 22 years. They would not go down for 22 years. Now, if you waited those 22 years, hey, you didn't buy a property for 22 years, right? Now, what most likely would happen is you would wait, and see that it's not going down, and you would end up buying, and you missed the boat. Well, there's never a bad time to buy a property. If it cash flows, you can buy it anyway. But the key thing here is, not only did you not buy for 22 years, if you did buy at that 7.33%, I think that was the number, right? The property that you bought in 1971, 22 years later, would be 4 times, it would be worth 4 times what you bought it for. So here's one supreme example of why you should not wait. You don't know what the future is, but I can tell you, based on the past, interest rates of 4 and 5% is rare, is super rare. Interest rates at 7% is not rare. That's common. Interest rates above 7% is probably more common. But we, especially in the United States, and recently because of COVID and a little bit before COVID, interest rates were so low that either you're new to the market and you think like that's normal, but it's not normal, or you just, nothing works for you numbers wise until those interest rates are lower. What I will tell you is a property produces more cash flow if it can cash flow at an 8% interest rate or a 10% interest rate than if it only cash flows at 3%. And if you're buying for cash flow, then, and you have to wait for interest rates to be 3%, it's just not a good cash flowing property. And it's super unlikely it'll ever go back there. So now, let's say, I'm talking about, it's tough here with these things in my hands and everything, but let's say I'm talking about, let's buy a property today where the prevailing interest rate is in the sixes, and for an investor, it'd be like 7.5%, right? Why do people get so hung up on these interest rates, right? Now, the logical answer is, well, hey, the higher the interest rate, the less cash flow I have, right? So let's use that logic. Now, if I'm going to buy a property today for $200,000 at 7.5% interest rate and it cash flows for, let's say, $800 a month, right? After everything, cash flows $800 a month, right? Well, when interest rates go down, let's say I bought it now and I have a mortgage for 7.5%, right? Let's say interest rates do go down to 4 or 5%, like all these people that follow me think they're going to go down to. Which, by the way, if you follow me and you think they're going to go down there, I'm sorry, you're never going to buy. Well, you're not going to buy for a long time. But let's say, we go into a major recession, right? And the Fed lowers interest rates to stimulate the economy, because that's when rates go down that low. That's really when it happens, right? So let's say they do that and the rates go all the way down to those numbers. Well, I already bought the property. I can just refinance the property. I can go get more. I'm paying 7.5. I go, oh, this is great. It already cash flowed at 7.5%. I'll just go take the 4% loan and I will make more cash flow. Now, you would say, well, wasn't it smarter to wait for those interest rates to go down? Well, I'll tell you a couple of reasons why it's not smarter. First off, if the interest rate went down that low, we're in a recession. You're probably not thinking about like, hey, let me take some extra capital and invest it in real estate. You might be running scared. But let's say you're not. Let's say you were smart. You had money outside. You had money waiting for this, right? And you're like, yeah, I was waiting for this day, right? Well, if it is a recession or something to that effect, you will get prices that come down, and you will hit the jackpot. Prices came down, you got the lower interest rate, everything's great for you, right? You bought the property, great. Now, let's say interest rates just slowly come down. And as they slowly come down, there's not a major change in the economy. And what I'm talking about here is history. I'm talking about history. This is not me like, I can only guess what's going to happen. I'm totally not telling you one of these things are going to happen or not. I do strongly disagree with anybody that thinks it's going to be between 4 and 5%, but it could happen, right? Now, COVID happened. When COVID happened, they were like, hey, the last time we had a pandemic was 100 years ago. I didn't even know we had a pandemic before. Like, blew my mind. So anything can happen. But let's say you don't have a recession, but, they start lowering interest rates to jumpstart the economy because it kind of got, unemployment went up and, all their metrics got made. Inflation came down, yada, yada, yada. When they start lowering interest rates, more people will come to buy, and the price of the homes is going to go up. So if you think like, hey, I'm going to have X amount of cash flow, or I'm going to get this great price you're looking at $1 million house to move into, and you're going, man, I can't afford that at 7. Well, you wouldn't be at 7.5, but let's use that at 7.5%, but I can afford it at 5.5%, right? Well, guess what? That house, when the rates are at 5.5%, might be $1.1 million. You're going to end up at the same payment, especially in the United States. If you're from the United States, we buy on payments. We don't buy on the cost of the house. And houses is very true. Obviously for cars, it's like, they don't advertise like, hey, this car is $55,000. They go, you can get this car for $425 a month with, $5,000 due in signing. Well, this is how you might be looking at houses that are $800,000, but you're really looking at the payment. If you're looking, that's how we buy. So the payment is going to push whatever the price is going to be. If interest rates go down and my $3,000, let's say right now, today, matter of fact, let's do a case study here, right? I'm sure you guys will like this here. All right. I said an $800,000 house at, let's say, 7% interest, right? For 30 years, and I'm just doing this off the cuff, right, is $5,800 a month. Now, that's before your property taxes and insurance, and I got to tell you, that's a lot of money, you know? All right, so let's say interest rates drop to, so let's say you're out shopping and you're like, well, you know, I can afford $5,800 a month. You know, I can afford $5,800 a month. Now, let's say interest rates drop from 7 to, you know, let's say 5.5, right? If they drop to 5.5, which I think is likely that they drop to 5.5, you now, instead of paying $5,800 a month, you can pay $5,000 a month for that house. This is not what you're going to do. You're going to go, wow, let's get the bigger house because we can afford more. So how much would it be? This is not like I'm at 950,000 is 5,900. So the person, I'll go back. It was $5,800 today. You can afford it. You want to buy an $800,000 house. Interest rates go from 7% to 5.5%. The same payment, you can buy basically a $940,000 house. You're going to buy a $940,000 house. You're not even paying attention to it. So the value of, like, the prices of homes is going to go up. It's not going to be like the $940,000 house is like the nicer house. As rates come down, more buyers will come in and they will push the prices up. So maybe you will get a nicer house, but it's not going to be $140,000 nicer. So interest rates have a major effect on whether people buy or don't buy. So when people are not buying, which is now a lot of people are not buying, I would say that it is a buyer's market if you're out there. If there's less people buying, you can go down and you can go negotiate great prices on houses. So there's an expression we use in the business, which is you should marry the house and date the rate. And this is what you should really do. You can go buy a house, and if it cash flows at 7.5% interest, you know, you buy it. If rates go down, you can just refinance, like I gave you that example. But you bought the house at a price that's going to be cheaper than somebody else did when the rates start creeping down. So you should marry the house, and you should be buying right now. There's no reason. Like, if you think you're Nostradamus and you're going to know that we're going to go into a recession and you will not be affected, your business, which, you know, you sell widgets, and your business will not be affected. It'll be a global recession. They will drop interest rates, and the $200,000 you have in the bank will, you know, you have it. You won't need it to cover your business. You won't need it because you're worried about COVID and when you're going to have your job back. This is crazy. You're never going to know that. And you might end up, just like these other people, waiting 22 years for interest rates to go down. Do not think that you are going to time the market perfectly. You can't do it in the stock market. You can't do it in the real estate market. So it is a great time to buy property all the time when it cash flows. Now, let me use the counter argument here, like, well, maybe that's not true. Let's say I am Nostradamus, and I know that in 2 years, the economy is going to go to crap, and I'm buying a $200,000 house today that cash flows $800 a month. And in 2 years, because the economy went to crap, that property that I bought for $200,000 will be only worth $100,000, right? So there you are, Mr. Real Estate Doctor, really smart. I'm Nostradamus, I think it is, you know, and I could tell the future, and, you know, I'm going to wait until that house is $100,000. Okay. Well, okay, let's say I was like Mr. Impulsive, and I bought a property, and I bought it today, and I'm cash flowing $800, and now it's worth half. Let me tell you something. I don't care, because I buy for cash flow, and I am not forced to sell that property. Now, it went from $100,000 to $200,000. That really sucks. And if you need that cash, that'll really suck. But why would I need that cash? Matter of fact, I want more the cash flow because the economy is not doing well. So what's going to happen in 5 years when the economy recovers? I can only tell you what history is, but history for real estate prices is up and to the right. So that property will be again worth more than $200,000. And I would have probably, this is what would have happened. I bought it for $200,000. It's worth $100 2 years later. Interest rates drop like crazy. I'm going to refinance. Instead of making $800 a month, I might make $1,200 a month. So I'm happy, I can live off of this income. And that's what you guys are. What are you watching for? You guys don't want to invest in real estate because you're a lawyer. You want to invest in real estate because you don't want to be a lawyer. Because you want to have your own time. Let's not forget why people invest in real estate. They invest in real estate for a lot of reasons. One's tax advantages, but I got to tell you, if you have a good amount of rental properties that are cash flowing, there's less stress in your life. You don't need to make as much money. And when your boss comes to you and says, hey man, I really need to see you work till 8 o'clock tonight because of blah, 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 you can go tell them to F off. That's why you're looking to invest in real estate. What I'm telling you is stop waiting. Because let me tell you what's going to happen when you wait. When you wait, you're never going to do it. Get yourself in the game. All these horror stories that you hear about real estate, which there are probably 90. Actually, here's another thing I saw. I think 49% of millionaires are millionaires from real estate. I'm going to look up this thing again, but it's something high. It's the second highest to entrepreneurs. And a lot of real estate investors are also entrepreneurs. But the majority of people that make their wealth, they make it from real estate. And they don't make it because they wait for the perfect time to buy interest rates or they're trying to time the market and when's the best time to buy. I'm telling you, you cannot lose by buying a property today that cash flows. If you can't find a property that cash flows, you're looking in the wrong places. So don't tell me prices are so high, they don't make sense. Everywhere I'm looking, they don't cash flow. This is true in 40% of the states of the United States, but 60%, really 62% of them, they will cash flow. They cash flow like crazy today. Check my next podcast for that subject. But what I'm telling you today is you shouldn't wait because what's going to happen is you're going to wait. You're going to have a baby. Your life's going to change. You're going to get a divorce. You're going to have a job that kills you. And guess what? You were watching me for 2 years for what? My good looks? I don't think so. You're going to basically be like, I just wasted all this time watching the Real Estate Doctors podcast because I didn't do diddly squat. And I'm telling you, the first step to get into real estate is make a move. And if you are going to buy a property that cash flows, you cannot get hurt. You are never forced to sell that property. And when the property values come back, you will make money. And I'm telling you, the only way I've been hurt in real estate is I bought property that didn't cash flow. So we've been over that a bunch of times on my podcast. So I'm telling you the opposite. If the property cash flows today, when you are putting significant debt on it, 80% of more of what you're buying it for, then you're not going to lose. You're making cash flow. When rates go down, you can refi. When prices go up, you can sell. You can do a 1031 exchange. Get into the game. It's not that hard to buy one property. I mean, you can buy a property done and rented somewhere in the United States for probably less than $30,000. And if you don't have $30,000, save $30,000, borrow $30,000. You can get $30,000 and get yourself in the game. And then you could say, I wonder if this real estate doctor is talking the truth or not. How are you going to know? The only way you're going to know is to get yourself in the game. But I'm here today just to tell you, you should be buying houses now and every day if you are capable of buying them every day. Because the more houses you have, the more peaceful life you will have from passive income. You won't be stuck with the man. You won't have to worry about AI. People are still going to have to live somewhere, Matter of fact, where are we going to house all the AI guys, the robots, They're going to have to pay rent too, right? I don't know. I just thought of that. That's a good subject. So guys, the best time to buy real estate is now. So have the best day of your life and go do something.